What's up, you guys? All right, well, this is going to be a little bit of a longer recap. During this recap, I break down the trades from today, but I also go through my last three cold streaks. The cold streak, actually the last four. The cold streak that I had last March, last June, last October, and this one that I'm on right now. And I ended up finding some very interesting similarities between those four red streaks, and I think I'm able to walk away with some good kind of action points of things that I can do tomorrow and in the weeks ahead to be a little bit more disciplined when it comes to managing my risk. So overall, this is a really solid recap for you guys. I hope you enjoy it a lot. These red day recaps are, I don't mind doing red day recaps, here and there. Doing 6 in a row is, this is the first time I've done that, and it's not fun. Losing 6 days in a row is not fun. Fortunately, I am not yet at my lowest drawdown that I've ever had. That was in November when I lost $53,000 over the course of about 4 weeks of trading. It was 4 really bad weeks. And all things considered, I'd probably prefer just to have 6 terrible days and then go back to good trading for the next 3 weeks. It's disappointing to have them all clustered together, but let's just get it over with, get behind it, get it behind us, and then hopefully see better trading on the other side. So I do talk a little bit about why I don't think this is related to the drop in the overall market, although I do think it's related to coronavirus as a catalyst because of how it's affected trading in small cap stocks. So I'll get into that during the recap. As always, I hope you guys, if you're watching this video, at least take just 1 second to hit the thumbs up and hit the subscribe button. I don't think you'll see anyone else on YouTube doing 6 red day recaps back to back, doing recaps every single day since January 1st, 2017, and really trying to show you guys the ups and the downs. There's some great ups, but there's some downs. Being a day trader is high risk. Day trading is high risk. Most day traders lose money, but those who figure it out, of course, can do very well, but even then still have some challenges as I'm having right now. And by the way, as it turns out, I've had a black cat sitting on my desk for a while. This has got to go. And if things turn around tomorrow, well, we'll know who was really to blame. All right, so that's it for me. Enjoy the recap, and I will see you guys tomorrow. All right, you guys, so I'm going to do my recap here for today's trades. Kind of break it down. This is probably going to be as valuable for me as it will be for you, just to kind of talk out what's going on. And I got to kind of make a game plan because what I'm doing right now isn't working, and I don't want to just keep doing this for another 5 days in a row. This is ridiculous. I've had red streaks, no doubt about that. I've had terrible red days, no doubt about that. But to have a red streak that is so sustained as this has been a first. Last year I had a day where I lost 30 grand in one day, and it was devastating. It was so devastating. I was so angry with myself, and I had to just kind of let it be what it was and start digging myself out of the hole. And it took a while, but I eventually got out, obviously, and whatever. I've been talking about this a little bit. These drawdowns. This was what I had in March of last year. So I lost 30 grand on this day, 29 grand.
Then the next day I made like 5 or 6,000, and then the day after that I lost 16 grand. So then I was down 47,000. I was like, God dang, this is a big hole. I, I can't keep swinging for the fences. I can't keep being aggressive. I've got to pull back, ease off the throttle, and just start digging myself out slowly. And I got it back. It took me from the end of March until May, but I got back and got back to all-time highs. And then I had another drawdown here last year, down 34,000. And it was basically one $12,000 day, two small green days, and then a second big red day. But again, it was like, God dang it. This is so frustrating. And maybe what would be helpful here would be to analyze these days. I'm not sure the best, easiest way to do it, but let's kind of do that. Because these are kind of like, you see how it's a first day and then second day. So first drop and then a second drop. And then I happened to get in October, first drop and then a second drop. And in November actually, I went down 53,000, which is the biggest drawdown I've ever had in like my modern trading history of since I turned the corner and became profitable. And this is where I was at yesterday, as of last night, down 42,500. And I'm down another 3,000 today. So 45,000. So I'm coming right down to the bottom here. I don't want to set a new low. So I need to turn it around. I tried trading everything that moved today, same as yesterday, and that clearly did not work. Didn't work yesterday, didn't work today. So, all right, so let's look at, let's start by looking at this overview of calendar. Let's look at 2019. Let's look at March. So this is when things went off the rails here. And this was on ESTR. All right, so ESTR, well, I guess it's no longer traded, but I know what happened on this one. I know at least roughly. What I did on this one, or actually I could probably pull up the trade here. So this stock had popped up from 150 to 2, pulled back, and schmuck that I am, I bought it at $4. Come on, man. I bought it right there. So what would you say that is? Marker. FOMO. That was FOMO. Granted, I thought it had potential to go higher, blah, 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 blah. But it was still a FOMO trade. I bought it very, very high. And I held it for a long time, but I was in with a huge position and I got smoked. So what happened on this one is I got in and I saw there was a big seller on the ask at 4. And I was on a day where I was really emotionally impulsive. And I basically said, screw it. There's a seller of 10,000 shares at 4. I'm buying those 10,000 shares. I'm going to buy it because when this thing breaks 4, it looks good for a squeeze up to 450, maybe higher. So I bought 10,000 shares. It didn't break. I started getting stubborn. And I said, screw it. I'll buy another 10,000 shares. Now I'm just totally emotional, just angry, knowing that this is either going to be a huge win or a huge loss. Bought another 10,000 shares, had 30,000 shares total, and lost $1 a share average. So in 2 accounts, my retirement account and my main account. So that was terrible, terrible, terrible trade. That was the beginning of that red streak. So it started with FOMO. Of course, for all I know, some of these green days had some FOMO in them, but focusing on this, that was a FOMO trade. All right, let's see, what about this one? BOXL, yes, AETI, BVR. I don't really recall these ones super specifically, but they may have also been FOMO trades. This one, SXTC. I want to look at this one here. So, 1 minute chart. This was a gap and go trade. So it was a stock gapping up. I don't know how far back I'll be able to go here. I don't think I'll be able to go as far back as I need to, but let's just see. So gap and go trade, I'm not going to put a strong, I'm not going to say for sure whether or not that was a good trade or a bad trade because I don't know. I can't see the pre-market chart. But obviously it was a big loss. And then that was the first trade out of the gates. And I took a couple more trades and lost more. So on that day, I traded past my max loss. Now it's not fun to hit your max loss in the first 2 minutes. No question about it. It's not fun to be like, wow, I just got here and I have to go. I hit my max loss. It's embarrassing as a teacher and trading in front of so many people. But even if I wasn't doing that, I would still be frustrated and not want to quit at 9:32. But I hit my max loss and I kept trading. Okay, so that was a rule break day. Rule break. So we got a FOMO day and a rule break day. And so that put me basically at the bottom. And then going into March and April, it was just a process of slowly digging myself out. Base hits, lots of small green. Well, this is a nice day, but mostly smaller green days. Okay. Then June. This was, oh my God, I was like ready to explode. So this was June of last year. So it looks like I'm not going back very far on the 5 minute, whatever. So in June, I went down, what was it, 37,000? So I lost 10 grand, then I made back 20. And I was in Italy for 3 weeks, which I can't remember when that trip started, but I think it started right around here. So this looks like 3 red days in a row, 2 tiny green days, then 3 more red days, and this was 1 big loss. XBIO. So let's see on this one. 1 minute. Yeah. So this is another one that I bought on this kind of red to green setup for a move into a halt. I added going into the second halt, and then it resumed and halted going down. So that always, when that happens, that's always a really tough one. I do like to add coming out of halts, and I don't know why this one ended up halting going back down, but from my initial entry down here at 980 or whatever this was, these could have all been sells. I could have been sell, 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 and then that would have been a green trade. And instead, I went add, 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 add to try to turn it into a home run. So I was swinging for a home run on that trade instead of taking the base hit. So home run, fail. And then, of course, after failing big on a home run, when you're down, 20,000 or 15,000, whatever it was, 10,000, you feel like you need a home run to make it back. I got a home run on this day. I did make it back. So I kind of got away with a home run, strikeout, home run, works, and then coming into this day, CTRV, nasty loss there, VISL. Looks like, again, on this day, I went down 10,000 and kept trading. Finished the day down 5 grand. Traded past the max loss. On this day, I went down 5 grand, and that was basically it. On this day, I went down 10 grand, 9 grand. Really, 2 big losses. That one we looked at. Yeah. So It's hard to say for sure whether or not there were opportunities to try to get small base hits. This day I was up 500 and then went red. Let's out of curiosity, how many days I went red right away? Went red right away. Went green by about 500 and then went red. That was probably on MLNT. But with 6,000 shares, I only made 600 bucks. Hopefully this isn't boring for you guys. I'm just trying to think out and kind of get a little bit of a more of a dial in on what maybe is some of the precursors to these big drawdowns. All right, and then in November, no, let's see, it was October. It was from October 18th. Oh gosh. Oh my God. I'm only seeing that. 8,000, 17,000, 4,000, 19,000, 2,000. That probably, let's see, so that was, so let's see, 5, so 8, that's 13. So 20, 30,000, so that's 30,000 in the red, 25,000 in the red, and then 45,000, 47,000. So $47,000 in the red in 1, 2, 3, 4, 5, 6 days. So that's about where I'm at right now. Very similar. Looks like I was on a pretty nice hot streak, a really nice hot streak. 13,000, 9,000, 5,000, 9,000, and then I took had a red day here. And I went up 1,000 and then dropped down. Bimmy was my biggest loss. Let's look at the 1 minute. Buying into a halt, adding going into a second halt. It opens lower and fails. So the thing here with this, of course, is that some of my biggest winners are on this type of thing, where they open higher and then they're up at 8, 9, or 10. So it's hard for me to say I shouldn't do that when I know some of my biggest winners are on it. However, I would say I was probably going for a little bit of a home run, although given the fact that I was up, I was having an amazing week. 20, 33,000. I was up almost 40 grand on the week. So if there was ever a time to be aggressive, that was the time. But it didn't work. Then on Monday I came in and went back for Bimmy. Same stock, and I went red on my first trade, made back some, and then went further into the red. Let's look at this on the 1 minute chart. Oh gosh, yeah. Bought coming out of a halt. It didn't, looks like, go into a second halt and then stopped out. That's a emotional stop out because I hit the lows, it came back up, and I should have sold like up here. So I would say emotional. Not following stops. Now, it looks like maybe on this day I was trying to reclaim what I made, what I lost here real quick. And then here it compounded with 2 really bad trades on BOXL, one in the IRA and one in the main account. Okay, so let's see. Oops, let's go back here. Details. 1 minute. The proper entry was down here. I didn't have a proper entry, so I tried to buy it going into a halt probably. Bad entry. Now, if I'd had an entry down here, it would have been totally different, but I didn't. So I chased it. Chased the 1 minute setup instead of pullback. Okay. Little bounce back here. It's weird. Oh. Okay, there we go. Little bounce back here. I even went red and then went green on that day. Went red on this stock, green on this stock, green on this stock. So a day where I overtraded a bit, quite a bit, 200,000 shares of volume, and then a big loss. Let's see, 1 minute. Doesn't look like I waited for a pullback. So I'm kind of seeing something a little common here. It speaks to the video that I made the other day and FOMO, impulsive, overconfident, too aggressive, impatient, not waiting for pullbacks. You know, of course, it's hard to know with any certainty. It would take a significant investment of time to go through all of my metrics to say, well, how many times did being impulsive make me money? How many times did it lose me money? And the net, did it make me more than it cost me? But while that may be true, that during a hot streak like this, you know, maybe it's okay on some of these trades to be a little aggressive. Wow, I traded a lot on this day. Man, bunch of trades. Guess the market was hot. In any case, while that may be okay on some days when the market is hot, is it appropriate on days when the market clearly is not hot? Because this is a stock that it looks like I made 10,000 on. Got in, got out. But here, this is different. I got in on the pullback and then got out up here. Sold some that I messed up on a little bit, but that was a little bit cleaner. SCS, I traded this on a bunch. So bought, sold, bought, sold. That's a lot better. So those were better trades. And did we look at this day? Yeah. So now let's look at. All right, so that was my worst drawdown that I've ever had, and during that drawdown, I was kind of spiraling. I was getting emotionally impulsive, FOMO, trying to grasp at straws, trying to make back the losses. As much as I would say, don't do that, I couldn't help but fall into that cycle. The whole thing with, of course, having losses is that it's a terrible feeling, and you know, losing money is not fun. And the quickest way to alleviate that terrible feeling is to make money back. And so knowing that, you know, that'll make you feel better, you start to get a little desperate looking for stocks that will move quickly. And I'm living proof that even after years of trading, you can still fall victim to that. So things fell apart for me on this day here, the 27th. I was having a great month. I'd had a couple red days, and I definitely overtraded on this day. I traded a lot, and I overtraded on this day too, but I was having a pretty good month. I was up about $85,000 on the month right here. And then on this day, I lost 16 grand. All right, so this was a disaster right out of the gate. Oh my God, it kills me to look at this. Right out of the gates, I bought the stock thinking it was going to rip up to 21. It halted going down, and I stopped out right here, only to watch it bounce, like right after I stopped out. It then pulled back, and then came back all the way to my entry. It did end up failing and being coming back down more during the day. Actually, no, it really didn't. Not much more. I pretty much just totally screwed that trade up. So the pre-market chart, which you can't see on this one, was extremely extended. And I jumped into it. What was this? This was on the 27th. So this was our pre-market chart. It was like super extended. Right out of the gates, it flushed. I didn't wait for a pullback. And while I was in that trade, I jumped into CODX and did the same thing. So I was being impulsive and too aggressive. So, could those be avoidable mistakes if I could train myself to go slower at the open, or to watch stocks ripping up and actually wait for a pullback? Because if I'd waited for a pullback, I could have bought it at 18. I mean, the thing is, this is tricky because, I kind of felt like this was a break of the pre-market highs. Of the two, this was a better quality setup for break of pre-market high. I was getting it at 18. But that breakout failed, then broke out second time. So this is also a stock a little outside my price range, which we know. Okay, so that was the first day. So the problem there is that in one day I lost 16 grand. That's a huge hit. It's almost impossible not to get impulsive after that, not to get emotional after that. So the next time I have a day where I lose 16 grand in one day, and it's going to happen at some point. I don't think it's possible to say or expect that it won't happen again. So the next time it happens, what should I do differently? It's so hard because in my mind, I'm like, well, on the day after a red day, the instinct is to try to make back the loss. And the question is, if the market is hot and I'm throttling myself by saying, oh, you just had a red day, that means today you can only trade 1,000 shares, I'm going to feel even more FOMO and even more frustration because I'm going to watch stocks rip, knowing that if I traded with regular share size, I would have killed it. But because I trade with small size, I'm not doing well. So I'm not really sure initially what the right thing to do is. I followed with a second red day. I actually went green, as you can see here. And then in one trade right here, gone, gave it all back. And that was on AHPI. So let's look at AHPI. So that was my first trade on it. That was my second trade on it. And that was the one that killed me right there. That was a FOMO entry. That was a bad entry. The right entry was to pull back. Okay, so perhaps I am more susceptible to FOMO after having a big loss. Again, if I look at, this day, for instance, like look at how crazy this was. Bought, sold, drops, bought, and then sold. Bought, sold. That was some aggressive stuff. But on that day, I came out on top. So sometimes being aggressive does work, obviously. All right, so that was the beginning. And that just may be having the mindset of, is this a market to be aggressive in? Or do I just have a red day and I need to cool off a little bit? So then Monday, red on almost everything, just red across the board. Pretty much only went green for a second and then started going red. Tuesday, this was a MTP trade. So this was a trade that I bought I thought it was going to go into a halt, and it didn't. And I stopped out when it came back down. That was a chase. I bought it coming out of the first halt. Thought it was going to go into a second halt. Oh my, TVIX. Well, I shouldn't have been trading TVIX. At that point, I was basically just like, screw it. Well, let's look at AHPI, because on this one I made 10 grand. I'd say that was pretty risky. The right entry was down here, and I bought it pretty high up. This was a very risky entry. Bought it, sold it, made money, sold the rest, got back in, sold it, got back in, sold it. It's pretty aggressive. I probably had just as equal a chance at losing on that one as I did making, and then when I did the same thing on TVIX, I lost. Yesterday, again, like today, traded almost everything that was moving. Pretty much never went, I mean, I was green tiny bit, went red, came back up, finished flat before commissions, generated $1,000 in commissions. That's what happens when you trade this many times. Just spinning your wheels. And then we have today. So today, INO, just unbelievable. My first trade on it was right here for the break of 9. So I actually bought 12,000 shares. I was in at around, I think, 95 average, 895. And so right here, it rips up to 915. And I was like, man, you are in the driver's seat. Let it work. And it squeezes up to 925, to 930, to 940. And I was like, I'm going to make 5-6 grand on this. And this candle right here drops all the way back to 910. I stopped out. I was like, oh my God, well, I can't let this turn into a loser. So I stopped out. Stopped out as it did. And then it came back up. I didn't get back in right here for the break of 940. It hits a high of 990. It pulls back, and then I got in right here because I thought it would break 990. And I gave back everything I just made. And I looked at it and I was like, man, I coulda, woulda, shoulda been up, $1 a share, and with 12,000 shares, and look at me, I'm red on the stock. So, the problem was that I didn't take profit into the move, and then I panicked out, and then I didn't get back in, even though I could have right down here, and then I just didn't trade it well, and then I chased it way up high because I was frustrated. End of the day, I got back in right here. All right, so I got back in at 75, and then I added at right around 95, 15,000 shares. I was like, it's game time. This thing's going to break 10. This is going to break 10. It's a flat top breakout. It's probably going to rip up to 1015, 1020. So I'm long 15,000 shares. It hits a high of 1010, and I didn't sell it. I didn't sell it. I was like, it's doing exactly what I thought it would do. And in this candle, it dropped to 962. I got out on the bounce for a loss. Unbelievable. That's a 50-cent drop in one candle. And this stock traded 111 million shares of volume and was still able to drop 50 cents in one candle. Now, I guess I expect it from a stock like COHN. This stock didn't trade on a lot of volume. It was the leading gapper this morning, up 92%, 1 million share float, have moved a lot pre-market. I got in it in kind of a risky spot. I'll say that this was not this is actually one of the trades that I told myself not to take in February because it cost me some money in January doing this trade. It was doing a trade on a stock below VWAP, anticipating that it would break through VWAP. What am I looking for? Maybe it's this one. Okay. So it was below VWAP. I should have waited for it to break VWAP, hold VWAP, and then take a trade. So I got in right here for the break of 7. And it didn't break at first, and I was like, okay, I'm in with 2,000 shares. Screw it, I'll buy another 2,000. And anytime I'm saying, screw it, I'm being emotional, aggressive, impulsive, and that's not me being intellectual about my loss and risk and stuff like that. It then drops in this candle here, and it actually hits a low of 609, and I'm holding full size. It's halted going down. It resumes, and it pops back up, and I actually sold when it popped back up. I was getting out in the 50s. So I managed my risk on that, I guess, a little bit better, but with 6,000 shares, I still lost 4,500 bucks. So I sold some in the 40s, and I guess the rest in the 20s. So that was a trade that I got in for the break of the whole dollar. The right pullback setup was right here. I didn't buy that. I bought the break of the whole dollar, thinking it was going to red to green, and it wasn't a very good setup. GNMK. I traded this one in the morning. What was it? Yeah, actually, I think it was right here as it came back up. I got in thinking it was going to break through 6, anticipating to break through the whole dollar, but it wasn't a good setup. It wasn't a good entry. This is grasping at straws. Anything that's moving, trying to jump in and just ride the momentum, but that's not a good, it's really not a good strategy. CODX, this one, I did the same thing. I bought it at anticipating the break of 1550, flushed down, instant $1,200 loss. That was the first one today that actually put me red. My very first trade out of the gates, I think my first trade was actually on CANF, and I made $107. And I was like, man, this is frustrating. I'm only up $107. Like, this is terrible. This is a terrible start to the day. However, the entry of this pullback was better, but it didn't work out well. OBCI, that one worked out a little bit better. Very light volume. And let's see, where was this? 95. Yeah, this was the break of OBCI, break of $5. NBAX. This one, I had a couple nice trades on as it was squeezing up here. I believe the first one was for a break of 1225, and that gave us a squeeze up here to 1252. But then in this one candle, look at this on the 1 minute. Once again, in one candle, it goes from 1252 all the way down to 1215. And then it comes back up, pulls back, breaks 1252, squeezes up to 13, and then another really big drop. Those big drops here and here and there, those are so hard to manage. I really don't like seeing them. In any case, I made money on it. HPI, this one, was good, I guess. 1974, I actually got in. This was a pretty good entry. I got in here for the break over 20. So that was a solid entry. So biggest winner on a solid entry. I think the problem is being patient, feeling that I'm behind the ball, that I'm not where I want to be on the week or on the month, and that I can't afford to just sit here and not trade when stuff is clearly moving. And so I just am jumping in stuff in the wrong spot, and then getting myself into trouble. So where I'm sitting right now, in these last, let's see, 227.20. There we go. So in these last 5 days before today, I was down 42,000. My accuracy was only 52%, and my average losers were huge because I had a couple of huge losses. I did have one nice big win, but I had a lot of small wins, and so my average winners are really small. It's kind of hard to draw like any strong conclusions about the price of stock because I'm just sort of losing across the board. But and it's not that, oh, I should focus on under two. This is too small a data pool to make any strong decisions on that. Market behavior, I lost money when the market was up and when the market was down. So I'm not I wouldn't say that's really a big contributor. I would say right now the biggest problem is that, and maybe this is kind of the thing looking back at longer periods of time, that when things start to go bad, rather than ease off the throttle, and maybe this is like a good analogy. Let's just picture for a second that you're driving a race car. And, or picture that you're skiing down a hill. And whichever one you want. So you're being timed. You're trying to set a record. And you see that you're, when you hit a checkpoint, that you're behind. And you're like, oh, shoot, I'm behind. I need to start playing catch up. And so to start playing catch up, you start getting a little more aggressive, and maybe a little sloppy, and maybe you get really tight in on one of those corners or one of those gates, and you're at the very edge of control. You're trying to make up that time. And you might spin off the track, and you might, lose both your skis and twist your knee, and you're out for the season. And then it's one of those things that I think about with like race car driving and stuff like that. That when you're having if you're having a couple bad laps, there may be something that's out of your control. That it's not you. There's nothing you can do. There's nothing the best driver could do. This is simply out of your control. It's raining. You're not going to set a record lap time when it's raining. Or, you're skiing and it's sleeted and there's ice and it's coming down on your goggles and you can't see a thing. No one's going to set a record time. And someone who got to do the run, when the weather was better, is going to have a better time than you, and there's nothing you can do about that. And if you try to like pedal to the metal into that, you're pushing into resistance. And I feel like 9 out of 10 times you're going to spin out and you're going to screw up. And you're going to get really angry with yourself. Why did I push it? I should have just stopped. I should have just thrown in the towel. Now with trading, it's a little different in the sense that on any day, you can anecdotally think about people who surely made money today. Oh, I'm sure he made money today, and look at me. I'm the guy who's red. Oh, here's this guy on, wherever saying he made money today in the chat room or, on social media. And so you always sort of feel that scoreboard. There's someone else out there that's making money. And of course, you feel that need to make a certain amount each week and each month to prove that, you still know what you're doing and that it's still worth you spending your time doing this and, everything else. And so as you start to go red, rather than ease off the throttle and be like, okay, the market's getting choppy. The market, and you can say whatever you want, this is Ross, you clearly are a bad trader when the market's down. Obviously this wasn't a great stretch for the market. That red streak that I had back in October started on October 18th. So it went from about here to like here. Market was going all-time highs. So, I was making money in the beginning of October when the market was down. You go back to other stretches, whether it's last year or, December. I made money in December. this is a factor, but this isn't the reason. Um, I think it's a factor because it's creating some confusion in the small cap market because things are moving up on coronavirus, and some of them are exaggerated and they're moving way up and then they're failing, and then things are dropping, and it's kind of wild. So I guess coronavirus maybe more than the overall market, but instead of um, instead of having the restraint to be able to say, okay, I'm gonna have to sit with this discomfort of being red $20,000 and just slowly dig myself out. I give in to the emotional, kind of the emotional side of getting impulsive and aggressive and trying to just swing for the fences. And I need to be really careful about that. I'm fortunate that my account, that I've been a successful trader to the point where um, I have a large account and I could always add more money to it if I needed to. I, knock on wood, haven't had that happen before. Um, I don't want it to happen, and I need to really try to tighten up when I'm starting to go red. So, the fact is right now, this is where I'm at. I'm down 42,000 plus today, so 45,000. And this trajectory is going down. So my next low is slated for down 60 grand. And I'd really like to not do that. I'd rather have this be the low of all time. And then for the next 2 years, you see, oh, he brought it back into within reason. Good for him. So what should I do tomorrow? Should I trade this many stocks? 1, 2, 3, 4, 5, 6, 7, 8, whatever? Should I just wait for A quality setups? The quality thing is a tough one because I feel like A quality can vary from market to market in terms of, when we're in a hot market, A quality is different than when you're in a really cold market. I think at the very least, I should wait for pullbacks. And if I miss the pullback, either wait for the next pullback rather than just jumping in higher and trying to ride the momentum. Just wait entirely for the next pullback and just trade pullbacks. So buying the break of high a day, buying the $0.5 whole dollar breakout as something is squeezing up right now isn't working very well. It may work well again a week from now, but it's not working well right now. So I should stop trading. I should trade less. I'm trading too much. And I think that's the biggest thing. I would say my own worst enemy right now. I'm being way too aggressive. I'm getting frustrated. I'm trading impulsively, and it's really not not a great thing. The biggest benefit of it is that I know I'm not alone in doing this. I know that all of this that I'm doing is very common among traders in general. I've certainly heard it from traders across the board, both my students, but also just traders that are not my students. So I think it's a good thing to talk about, just for the benefit of those that are also going through it, whether it's right now or whether it's weeks from now or months from now when you're watching these videos. Because I know that this is, in this moment right now, I feel completely defeated. I feel tremendously frustrated. I'm angry with myself. I now have a $45,000 hole that I have to dig myself out of. I feel like I've ruined my entire month. I'm going to be down on the month 25 grand or something like that, which is horrible. That's not great at all. So my worst month right now, I believe, is around minus 25,000. So, I'm not, those are not the type of records I'm trying to set. I'd like to really tighten things up. So the conflicting interest of digging myself out slowly, calm, cool, collected, that's at odds with trying to finish the month with some measure of respectable profit. Because the only way for me to make 25,000 over the next 3 weeks and be green or go green on the month would be to have some nice like home run trades. This trade on AHPI, I made 5,200, but if I had lost on it or it went the other way, I would have lost 3 or 4 grand. I can't afford to lose another 3 or 4 grand. So I can't take that level of risk. I have to take less risk, which means smaller gains, at least for a few days, probably all of next week, while I try to slowly dig myself out of the hole. Today I took 15,000 shares of INO. Granted, I was up quite a bit on it, and the stock, slapped me in the face, but that 15,000 shares was a big order. So, I could go down to 2,000 shares for tomorrow. The problem with that is the feeling that if tomorrow is a day where the track is dry and I'm out here trading with my, winter tires on, what kind of idiot am I? I'm totally undercapitalizing on the opportunity. And then you're sitting on the sidelines and you're just going to get more and more frustrated. So the ultimate goal would be to have the level of composure and zen to be able to truly trade the market that I'm in right now without bringing the baggage from yesterday. I don't know if I'm capable of doing that. I'm sad to say. So maybe I'll set it at 6,000 shares, but I had a trade today with 6,000 shares that I was down 30 cents on, and I was like, great, that's an $1,800 loss. I just don't feel like I can afford those types of losses right now. So, of course, at the same time, if I really was taking good quality entries, one of the things that you ask yourself is, what's my stop? So, you do the math based on my stop. I did take my shift 1 hotkey off, so I can't get in by pressing shift 1, which is good to slow me down a little bit. I can bring my order size down a little bit and see if that helps. Tomorrow's Friday. It's the end of the week. Lucky me, I have jury duty, but if it's canceled, then I won't have to go, obviously. So I may or may not even be able to trade tomorrow. Probably be better if I'm not. Although I can't imagine I'd be a good juror being as emotional as I am right now. But hopefully no one comes up to the stand who made a lot of money day trading. Or lost a lot of money day trading. I don't know how I'd be able to be impartial. But I, of course, will do the very best that I can, if I am to serve. So I may not trade tomorrow, and that may be for the best. And whether I do or not, I'll be back at it, of course, Friday or Monday. The next day I'm trading. I'm staying in the trenches, and I'm not going to just say, oh, I'm going to go take a vacation and take off for a week. Yeah, it's nice to clear your head, I guess, but still have to come back to the hole that I have to dig myself out of. It's good to let the emotions subside a little bit, but I've just never really been the type to want to do that. Although perhaps after one big loss, taking a day off the next day would be a possible way to help cut that emotional connection. But I would just be concerned that I would take the day off and we have a stock, like DRYS that does something absolutely insane and I miss it completely. Again, that's FOMO speaking, but I'm not sure that I don't know. I'll have to think on that one. So anyways, fairly long recap here for you guys. Hopefully you enjoy it. I didn't enjoy making it, but I think it's probably good for me. So tomorrow's a new day, and no doubt, a month from now or whatever it is, 2 months from now, when this is well behind me, I'll be back in great spirits and, won't even be thinking about this. But in the moment, when you're in the middle of it, it can be just so hard to step back. So I'm feeling a little bummed out right now, but tomorrow's a new day, and whether or not I trade, I don't know yet, but I'll be back at it the next day I'm able to trade. So it'll be either tomorrow or Monday. All right, I hope you guys have a great rest of the day. If I don't see you tomorrow, enjoy tomorrow, and try to manage that risk. A quality setups, really focus on the pullbacks. Focus on the pullbacks. Ride the momentum of the breakout. Focus on the pullbacks.
Hey, did you know every morning I go live to stream my pre-market watch list? Subscribe to the channel, press the alert button, and you'll get the notifications. And if you want to learn more about trading, check out the links in the description. And if you have questions, post them in the comments, because I personally respond to every comment posted on my channel.